One educational, informational, entertainment purposes only, and nothing should be taken as a recommendation to buy, sell, hold any securities at any time. We are here just to spread the word about how BTA analyzes the markets, how we look at the markets. This is Rod from BTA, and we are known as the middle traders. We are not going to get in at the exact bottom, and we are not going to get out at the exact top, but we will make money in the middle and lots of it. We are the stock market masters. Go over the major ETFs because we got a follow through day last Thursday on the 26th. So I want to go over the major ETFs because we went long these ETFs on Friday, early in the trading session when the market first opened. So the first thing we're going to look at is the follow through day. And this is the daily chart of the Standard & Poor's 500. And as you can see, we had the first day rally attempt, okay? And you ignore day 2 of the follow through day, the count rather. So we had this is day 1 of the rally attempt on the 20th, okay? So we ignored day 2, ignored day 3. Day 4 could have been a follow through day, but the volume was lower than the previous day, so it didn't count. But then on day 5, which was Thursday last week, the 26th, May the 26th, 2022, we got our follow through day. Okay. And it was a very powerful follow through day. So we didn't trade on the day of the follow through day because we had some economic data that was coming out, some inflation numbers on early Friday morning, which is the 27th at 8:30. So we wanted to wait until those numbers come out because if those numbers would have came out really bad, the market would have collapsed. So it was safer to wait until those numbers come out on Thursday, on that Friday morning. The numbers came out. They were pretty big. They were pretty good. Well, not good, but they came in as expected. So it wasn't bad. And the market rallied hard. So the follow through day was Thursday. We entered the market on Friday. Okay. So now let's look at some of the ETFs. So we're going to bring up a daily chart of this is the Dow Jones, and this is our indicator lowest, right? So let's take a look at this. So if you notice, okay, when the blue lines, are the low price, like right here, okay, prices are going, when the blue line is below price, we're in the upswing and prices are moving upward. Normally when the blue line is there, we're going to be in the upswing. So this is our indicator that we have a beginning of an upswing. So, and when the magenta line is above prices, when lowest put the magenta line above prices, then prices the market usually and prices usually be trading downward. So when the blue line is below prices, we're moving up. When it's above the price, the magenta line, you're normally going to be trending down. The swing will be moving downward, okay? So lowest stands for the launch of the immediate swing. So she lets us know when the market is going into a swing, whether it's going to be up or down. So if you notice here, we had the follow through day, okay, which was on Thursday. This is Friday's action. And if you notice, Lois signaled an upswing several days before that. So we came in on the market right here, okay, on Friday morning when we broke above this pivot. So we had somewhat of a double bottom here. We waited. We didn't trade when Lois signaled, okay, when Lois signaled upswing was starting because we had this downtrend in 21-day moving average. We wanted to wait till we get above that, okay? And so it broke above that on Friday. And then, okay, it broke above the 21-day moving average actually on Thursday. Then on Friday, we got above this middle area of the double bottom, okay, the center point, and that's where we went long. That was the pivot. That's where we went long on the DIA. We took our long position right there, and it worked out pretty well. Okay, that pivot was around 327. It closed at 332. Not bad. Let's see now if come the market is closed on Monday for the holiday. So let's see if on Tuesday the market can hold some of these gains. So we'll see. But that was the pivot. So that's where we went in at. So this wasn't too hard to see. I mean, we was already looking for the market to bottom out and start a rally. We was talking about that for a while now. But this is something that was not hard to see. We had a downward trend in 21-day moving average. We had these overhead resistance, which was prior support. We broke that. We got the MACD turned bullish, right? We had a bullish crossover on the MACD. If you look down here at the bottom right here, we had our bullish crossover on the MACD right here. Okay, and the histogram was expanding. All right, so those are all good signs. So those are all good signs that the market wanted to move upward. So now let's look at the next. This is also the Dow Jones, a daily chart of the Dow Jones with just the moving averages on there. So notice the 5 crossed above the 9 back here, okay, on this day here. So we got a bronze, we call that a bronze cross, okay? And prices jumped above the 5 and the 9 and started moving up. We got above the downward trend in 21-day moving average, and that's turning up. The only thing with this chart that I would like to see, could have been better, is if as these prices was moving up, these volume bars here, okay, if we could have started getting above average volume, at least higher volume than the previous day. So as the market was moving up, the volume was stepping up also. That would have been better, okay? But this was a holiday week upcoming, and sometimes volume is light during a holiday week, a holiday weekend, and also especially when it's going to be a long weekend, long holiday weekends. So, the volume could be light. People don't like to hold positions over the weekend and over the holidays sometimes. So it could be light trading. So we're going to say that maybe this volume could pick up next week when the market start trading better. When the market, more liquidity coming to the market, more people start trading. Okay, so let's see if the volume pick up when normal market, action starts over again on Tuesday. All right, and hopefully the market will continue to go up, and we see some volume come in on these volume bars. Now, this 50-day moving average is a downtrending 50-day moving average. This red line, the 50-day moving average, that's right around 336.26. Okay, that's our first area of interest. All right, as you can see, this market could run right up to the 50-day and then fall apart. All right, so we are still in a downtrend. This is just a relief rally, right? Possibly it could be a relief rally within the bigger downtrend. So we got to keep our eye on this first level, would be the 50-day moving average that's downtrending around 336. So that's the area of interest for me right now. That 336 level is the next area of interest. Okay, that's the next area of interest for me. Now, let's look at another chart of the DIA. And this is the daily chart, okay, also. But we have here, up top, is a line chart, okay, of closing prices. This is just a line chart of closing prices. Here, we have the on-balance volume. Another way of looking at volume, a running total of volume. So what we do, we put a vertical line here across the highs, and at the high of the price, and that volume is going to go right across the highs of the on-balance volume. And here we got the accumulation distribution line, and down below is the price volume trend. Okay, so we we want to see price break above its high. And at the same time, when price is breaking above its high right here, price is moving above that. We want to see the on balance volume moving above its high also. That's telling us that volume is coming in. So even though we don't see that volume on the volume bars, we know that volume is coming into the market, into the DIA right now, because you see the on balance volume and the accumulation distribution line is telling you that. The price volume trend is also now starting to give a positive reading, and it's starting to get above its high. So that's telling us, even though we don't see it happening on the volume bars, you know that volume is coming in. See, they can't hide from us. They can't hide from us. We're looking at volume in all different angles. We're looking at it at all different ways. They cannot hide from us. We will not let them hide. All right. So we see you. All right, institutional investor. When you're accumulating, we see it because we're looking at volume in all different ways. All right, the next chart here is a weekly chart of the DIA. Okay, we just looked at some daily charts. Now, this is a weekly chart of the moving averages, okay, that we use, okay, of the DIA. Now, this is important. This moving average right here is the 100-week moving average, and this is the 200-week moving average. It's not that often we have these on the chart. When we're in a major correction, then these averages can come into play. Normally, we just take these off the chart because normally the 40-week and the 50-week is enough, okay? But because the way that the market has been trading off so hard in this correction, these moving averages now are relevant, so we had to put them on the chart. But if you notice, we got right down to the 100-week moving average. We cut it, undercut it twice for 2 weeks, and now we're back above it. Well, that's key. Staying above that 100-week moving average is very, very important. But now we at a critical point. You see this week right here, this is this week's action. It ran right up to this green line. Okay, so this white line here is a 4-week moving average. The green line is a 13-week moving average. All right, 13 weeks. That's equivalent to basically one quarter of trading, 3 months. All right, we traded right up to that moving average and stopped at it almost to the penny. So when I'm looking for on Tuesday is can we follow through on this and get above this 13-week moving average? Okay. I'm sorry, y'all. I apologize. The white line is the 4-week. The green line is the 8. The yellow is the 13. I apologize about that. So please forgive me. I was looking at the yellow moving average and I said 13, but I was writing on the 9. Okay. So we're going to start that over. Let's start that over. Just make sure we got that clear. The white line, okay, the white moving average line here is 4 weeks. The green moving average line here, which is stopped right at the green moving average line, that's our 8-week moving average, equivalent to 2 months. So 1 month, 2 months. The yellow moving average right here, the yellow moving average is our 13-week. That's equivalent to almost 3 months of trading, almost 1 quarter. Okay. So that's our 13-week moving average, the yellow line. So what I'm trying to say now is that prices stop almost to the penny of the 8-week moving average. We got to get above that, and we got to try to see if we can get above this 13-week, which is at 335. Okay, so we are coming up on some very key areas of interest, right? These areas could cause some resistance. I'm not saying it's going to fall apart, but what I am saying is that we need to keep an eye on these levels because this can cause the market to fluctuate, maybe pull back a little bit, and then rally up. It can move sideways. Or it could just get totally rejected and collapse. But let's hope that that doesn't happen. But so what we want to do, okay, is keep our eye on this 100-week moving average. We start breaking back below that and closing below this 100-week moving average. Well, that can be a problem. All right, you don't want to see that. So we're going to discuss this chart, this ETF rather, on our Bollinger Band strategy, which is now coming into the pivot week next week. All right. But the spread for this week is so large, we're going to have to use some different moving averages to help us identify levels that we may have to use as our stop loss to get out. So for right now, I'm saying what I'm watching, what we're keeping an eye on here is this 100-week moving average. We start closing back below this 100-week and start closing back below this 4-week, the white line, the 4-week moving average. You see the 4 and the 100-week is right here together. We start closing back below that. We have to start being careful. Okay. So on the weekly chart, that's the level. Right now, the 4-week is at 323.95. We can give this some room, but we start closing back below that. That could be signs that the market may be starting to pull back a little more than what we would want. So that's going to be the key area we're going to watch on the DIA on the weekly chart. That 100-week moving average and that 8-week moving average are right there together. If we want to see it stay above that 100-week and that 8-week, let's see what happens on a closing basis. On a closing basis, remember we're talking about on a closing basis. Okay. Now let's look at the SPY. All right, we're gonna look at the DIA and the SPY, and on the next video, I'm gonna go into the QQQs and the IWM, and also the ITOT. All right, but let's look at the SPY right now. And as you can see, once again, we had the follow through day on Thursday. That was right here, and on Friday, it kept moving. This was the pivot. This is where we went in at on the SPY right here. Okay, as you can see, it's the same pattern almost as we saw in the DIA. Prices broke above this. It wasn't that hard to say that's the pivot. Look at the on-balance volume expanding. We had the bullish crossover on the on-balance volume. The histogram was expanding. So that's where we went in at on the SPY. All right. So that wasn't that hard to see. All right. Now let's look at the moving averages for the SPY. This is a daily chart of the move. It did pretty well. Okay, it looked pretty good. What happened here is we had our bronze crossover where the 5 crossed above the 9 right here. We got the crossover that happened on the day of the follow through day. Okay, happened on the day of the follow through day, and now the 5 and the 9 are starting to move up towards the 21 day, which is the yellow line here, okay, which is the yellow moving average. This yellow line is 21 day. What's nice about it, everything is turning up. The volume, okay, is still, the volume bar is still, we would like to see them expanding, getting higher and higher, stepping up. But right now, the volume bars are looking the same as with the DIA. They are a little low, a little below average, and a little low, okay? So, but like I said before, with a long weekend, so maybe that's why the volume wasn't coming in. Let's see what happened when the market opens back up on Tuesday. But here, once again, you got a downward trend in 50-day moving average. This is going to be an area of interest. If we make it back up to 426 is where that 50-day moving average is at. That's going to be our next area of interest. We might want to keep an eye on that level. Okay. So now this is our on-balance volume accumulation distribution chart. Notice this the moving average, not moving average. I'm sorry, the line chart up above the green line here is the line chart of closing prices, right? So notice that we had a high here, a peak where we have this vertical line. Okay, we got the peak at closing prices, right? So we wanted to see price break above that peak. We wanted to see price break above that peak right here, which it did. So you want to see the on balance volume. If you follow the vertical line down at the peak at the on balance volume and the peak at the accumulation distribution line, you see we broke above on those days also. So that was the pivot for us, where I showed you on the bar chart, right? And you see the line chart of closing prices, it broke above it, and the volume, the on balance volume in the accumulation distribution line is confirming that what we're not seeing on the volume bars, we're seeing it now on the accumulation distribution and the price volume trend. It's breaking above its high. So, like I said before, they cannot hide from us. We see the institutional investors coming in to the SPY on Friday. They came in. There's no doubt about that. Somebody somewhere was buying. Okay. Now we have a weekly chart here of the SPY, and the same thing we're looking at. If you notice here, we're looking at the same thing. Okay. The 100 week, the 100 week, we got above the 100 week. And the white moving average is, once again, the white moving average is our 4 week moving average. And look at the green moving average, once again, is our 8 week. So just like on the DIA, the SPY, okay, the SPY is trading up right to the downward trending 8 week moving average. But once again, we want to see prices stay above this 100 week moving average. Prices start closing below this 100 week moving average and below this 4 week moving average, well, that is going to be some concern to us. So once again, we want to see prices stay above the 100 week, stay above the 4 week, try to get above that 8 week moving average, and then this downward trending 13 week can be an issue for us. So we are at areas of interest right now where we want to keep an eye on it. You got to watch it. You don't want to think that the market is just going to run and just keep running. We are in a downtrend. We are in the correction. The Qs was in the bear, still trading off pretty hard. And this could be just a relief rally, some kind of tradable rally in the overall downtrend. So we want to be careful, okay? We have to be careful. So now we're going to leave it there. We're going to come back and we're going to pick it up with part 2 of the Qs. Look at Lois on the Qs. Once again, Lois nailed it, okay? Lois nailed it. Put the nail in the coffin, all right? So we're going to stop it right here, and then we're going to pick it up with part 2. We're going to look at the Qs, the IWM, the TOT. We're going to look